So this week I was reviewing my financial statements for my own personal business, our accounting firm, and also reviewing some financial reports for one of my clients and comparing revenue generated and the growth in revenue. And I was just thinking about the business value, what the business valuation would have been the prior year versus the current year, just reflecting on some of the growth of my own business and researching and reviewing the growth in one of my clients' businesses. And so I spent time just kind of thinking through business value, what the potential sales price of a business would be, what it's worth in the marketplace, and wanted to bring this to you as a question. And the question is, are you giving yourself an annual growth raise, which is tax deferred? And so we'll dive into that here. Just wanted to give you a quick welcome. My name's Johnny with Barrett Consulting. We serve electrical business owners. All right, so let's go ahead and go through this. I prepared just a basic example of a company and the owner's compensation, let's say, for comparing 2 years. In this case, I just put in, for 2022 versus 2023. And so in calculating earnings, we're going to include payroll. Let's assume that the owner pays themselves a wage through payroll. And then, of course, after all the expenses, all the income and expenses for the business at the end of the year will show either a net profit or a net loss. And so another part of the owner compensation could be the owner business profit. And this part is more what I'm focusing on is talking about the business value increase or decrease, which could, increase the potential sales price of the business. So let's dive into this. Okay, so Billy's Electrical, obviously this is not a client. This is totally fictional. But so this Billy's Electric in 2022, let's say they had revenue of 300,000, cost of goods sold. Yeah, I think that's like about a 77%, which is kind of industry normal. So they have their gross profit and then overhead and a net profit. We're just putting 8%. This is just round numbers. Um, so that's their numbers for 2022. Now, for 2023, we put an increase of revenue up to 410,000, and we kept the ratios pretty much the same, where the net profit again is about 8%. So this translates into about a 36.6 growth, 36.6% growth in 2023 compared to 2022 of both revenue and net income. So a business owner, let's say is a single business owner, 24,000 of net profit in 2022, 32,800 in 2023. Great. So I put together kind of an earnings statement and framed it as so Billy's payroll expenses. So let's say he's paying himself $95,000. Again, this is just a number that I kind of picked after researching, what's kind of an average wage for a more senior electrician. So I could be about right on that, could be off, but just for the numbers' sake and showing this example, 95,000. Business profit of 2022 was 24,000, and the business value increase, I didn't really put that there because we're comparing from 2022 to 2023. So total earnings realized and not realized, so about $119,000. And so on this side for 2023, we're saying, okay, Billy gave himself a pay raise of, I think I put in about 5% for that one. Business profit was again 32,000. Remember from here, 32,800. And the business value increase. So in 2023, the business increased in value. So let's look at the the calculation for this. So in 2022, so there was a total revenue of 300,000. And I put in here times 0.545, I believe, which gives us the business value of 163,500. And that is based on just some numbers that I looked up online on the web of business valuation. There's different ways to calculate it, and one of the ways that they use to calculate it is based on business revenue. Obviously, they have other calculations that brings into play, but just for the sake of this, I kind of went middle of the road of what I found online and came up with the 5.545 as a middle of the road um, number to plug in to figure out the business valuation based on revenue. All right, so that gives us that. And then for 2023, we were saying there was $410,000 of revenue times 0.545. So that's going to give us a business valuation of 223,450. Great. All right. So there's the calculations. Don't worry, we're not going to do a whole lot of calculations. Really, what we want to talk about here is how um, the increase of revenue. So the increase of business revenue was 36.6%. So that translates into, going from an average of $25,000 of revenue per month to $34,000 of revenue per month. But for the business owner, that 37% of growth in the business translated into a 62% pay raise. So how's that possible? Well, we have the payroll wages that where, he gave himself a 5% raise for the year in salary. Then there's the owner business profit, which again went from 24,000 for 2022 to 32,000, right? So there's that. But then there's this business value increase or decrease. Hopefully we're increasing every year. But yeah, this could obviously go up or down. And so the total um, earnings, which are realized and non-realized, obviously, because in this case he didn't sell his business, but in 2022 he had earnings of 119,000, whereas in 2023, because of the business growth, he had a much larger earnings, 192,000. So coming back to this, 99,000 of payroll, 32,000 of business profit, and 59,000 of value increase of his business, which is from 163,000 of business worth to 123,000. So all that to say, um, as a business owner, when you're thinking through your earnings, just want to challenge you to think about it not in terms of just the dollars that you're making through paying yourself and your profit, but also in terms of what your business is worth, should you decide to sell it in the future. And so the nice thing about the business value increase, like if we come back here, this 59,000, obviously it's not realized. It's a gain that's not realized, and so you're not going to be taxed on that. So, if let's say we take a business from $1 million in profit to $10 million in profit, right? So that would essentially, if we say $1 million in profit times 0.545, which is our, kind of business valuation calculation, 545,000. So if we 10 times the revenue of the business and the other qualitative factors stay about the same, um, we can add another zero to that and the business would be worth quite a bit more, right? It would go from $500,000 to about $5 million of worth if it was 10 times. So it's pretty powerful. So I have a question for you. are your goals, for the next year, for the next 3 years? And I have a question for you. Could you double your business? And then could you 10x your business? And when I throw out these numbers, I heard a quote by Dan Sullivan. He was talking about 10xing your business and um, how when we think of 10x, we may feel a little bit of friction there. It's like, oh, how is that even possible? Well, could you 10x your business in 1 year? Maybe you can, maybe you can't. But what if we gave you 40 years to 10x your business? Could you do that? That would require a certain growth rate to get to that 10 times. But if we widen out the amount of time that we are given to 10 times the business, then it might feel a little bit more doable. So a lot of times when we're setting goals, obviously we want them to be realistic, but we also want to kind of think through the timeline and think, well, if I do have a goal of going, 10 times seeing the revenue of my business, I don't have to do that overnight. But if I set a goal that has a time horizon that makes sense and work towards it, then maybe that would become doable. So my challenge to you is, and my challenge for myself is to include the business valuation in your income equation. Now, you may already do this. This may be really natural to you, to think in these terms. It's really the business owner advantage is that not only can you make a wage, but you can also make a profit. And not only can you make a profit, but you can also build value and build equity in your business, and you won't be taxed on that increase until you decide to sell or something like that. And so it's kind of an unrealized gain that's not taxable. So that is definitely a business owner advantage. And in thinking in those terms, can help. When you're making goals, and it can help you think in kind of a longer term strategy, kind of like a more comprehensive or larger view of things, and help you frame what you're doing and why, and what the purpose is on a longer timeline. So again, challenge to include business value in your income equation, and then also set realistic timeframes for your goals and work towards them. Um, Maybe your business is where you want it to be, and you want to do other things. Like maybe it's not a question of growth. Maybe it's a question of, well, you want to refine some things, tune up your outflow of funds, on your overhead or different things, and just really dial in your net income number, and that's great too. But whatever your goals are, set realistic timeframes for those, and just steadily work towards them. Anyways, I hope that this exercise, this mental exercise of your income and the increase in value of your business as a piece of your income is useful to you. It definitely helps me um, when I'm looking at my own business, as well as when I'm looking at my client financial statements and talking through things with them. I would love to hear some feedback on this. If you have any comments or questions, would love to hear about that. And yeah, if you are at a point in your business where you think it may be helpful for me and my team to look at what you're doing and provide some feedback for you on your financial processes, and aligning those with your goals, I'd love to hear from you. Thanks so much. Hope you have a great day, and talk soon.